Good afternoon. This is Jim Vaughn from Vaughn CPA with another report on our COVID-19 stimulus packages and some of the new information. And we really did get some new information very late yesterday afternoon. The Small Business Administration previously issued the first interim final regulations, and yesterday afternoon we got the second interim final regulations related to the PPP loans. The PPP loans are the payroll protection program loans in which you can get 8 weeks worth of forgiveness if you follow the rules and spend it on the right things, calculate it in the right manner. So these are very popular. They're running out. Many of the banks are not issuing any more or are saying we're out until Congress allocates some more money. Had some of the smaller banks say that this morning. The larger banks just plain taking longer to get their loans through. So if you're having trouble, a new place is Quicken Intuit. If you're a QuickBooks user, you might check their site out. It looks like they are now giving some loans or some assistance through the PPP programs. But in this second interim final order, I'm sorry, I can hardly say that with a straight face. There are some very interesting things. They've come out with some rules and some regulations and some ideas on what to do with the self-employed. And so I'm going to cover right now some things on the Schedule C. If you are a self-employed person, you probably file a Schedule C with your tax return, and that has your income, your expenses, and your net income, which you then pay tax upon. The net income, of course, as tax preparers, we've tried to get that down sometimes, and sometimes we're able to because of the use of the legal use of depreciation rules or other rules that related to a type of accounting. In this case, you may want to rethink that because in 2019, if you are applying for this loan, you may want that figure to be a little higher, even if it costs you some in taxes. The reason is that the bottom line, the net income from your Schedule C, is what is going to be considered payroll. And if you are the only person, you work out of your home, your van, your car, whatever, and you're the only person that works in your business and you file that Schedule C, that bottom line is going to be the amount that you are eligible, the starting point for eligibility. So you take the bottom line, divide it by 12 to come up with your average for the year, multiply it by 2.5, which is what they've set as the amount that they will give you. Then you need to find a bank online. Nobody's seeing anybody, but an online bank that will accept your application or is accepting applications. File whatever documents they need. Usually they are asking for something to support the payroll. Now, in the case of people who employ others, there will be 941s and W-2s and 940s and all of those kinds of documents that we're familiar with. But in the case of a sole proprietor who has no employees, the documentation is the Schedule C from the 2019 tax return. Whether you have filed that return or not, they are asking for the 2019 Schedule C to support the fact that you were actually in business last year. They are going, for forgiveness purposes, they will forgive 8/52 of that loan, or 8 weeks basically, of the net income. If you have employees in addition to yourself, then you get also the credit for those employees on the basis that we've talked about before, where you take the average monthly payroll, divide it by, multiply it by 2.5 times, and that would be part of your loan package. And you'll have to provide the proof, the information that has been asked for on that. But for this loan, for the self-employed, you now must provide the 2019 Schedule C. There may be other things that would be required. We found every bank has their own little ways of wanting different things. Sometimes they want a full tax return, sometimes they just want payroll reports. And the bank has the right to do that based upon whatever their rules might be. You can use this money for owner's compensation for the 8 weeks. This is something new. So not only can you use it for paying your payroll, but you can use it to pay yourself back for your lost income. But it cannot be more than what you had taken on an average basis for the prior year. And this is important that you do that. It can also be used for the employee benefits if you have employees, but it cannot be used for employee benefits for an owner. And so that's a big thing for some of us, and clarifies something about health insurance, because first health insurance was in, then it was out, then it was in. We didn't know. Now we know it doesn't apply for the owners. It only applies for the employees. Rent, mortgage, other expenses, utilities, that's basically it that you can pay for it, and it must have been deductible on your Schedule C for your 2019 tax return. Therefore, if you are using a part of your home and you didn't follow the rules so that you could take all of the deductions, maybe you just didn't keep a log, or you didn't use the place exclusively for what you needed to, then you didn't get to deduct that, and now you don't get to use that money, this money, for paying those parts back. So it's only what's deductible on there. Now, I said earlier, think a little bit about what you're going to deduct, because we have some bonus and accelerated depreciation methods. They're going to use the Schedule C. They're not going to use your financial statement. They're going to use the Schedule C. You bought the truck, you wrote the truck off, that's what's going to be used. And I would like to say it differently, but that's the way it is. At least we have a framework now. We know what we're working with. We have a place to deal with that on the self-employed individuals. And I'm going to stop this tape now, but the next one I do will have to do with guaranteed payments. Thank you.